bit more for the Dow, off 400 points now. Nasdaq down nearly 300. Contrast what's going on today with the big rally yesterday. It's called volatility, up and down all the time. Huge swings, very difficult to navigate as an investor. Michael Lee joins us right now. You used to call him the Super Bull. I don't know whether we call him that now, but he's here with us now. The CPI report shows consumer prices up 7.9%. What does that do to your investment outlook?
Well, so Stuart, when you look at the core, which takes out food and energy, we increased 0.5% month over month from 0.6%. Yeah. Month over month last month. Okay, if next month we're at 0.4, and in theory, at this point in the cycle, you want to be looking at it at a 0.1 to 0.2% increase month over month, and these month over month increases are still too high, but headed in the right direction. Okay, the other thing that we're going to see in next month's report is there's been a dramatic amount of financial tightening by the way of the Fed jawboning. So without raising interest rates, the 2-year Treasury's going from 20 basis points into September up to close to 1.5 now. Credit spreads have tightened dramatically, and then Chicago Fed National Financial Conditions Index has tightened dramatically. This is bad for financial assets, but if inflation does get in check, and this war kind of gets to a peaceful solution closely. Both
of those are huge ifs. So look, why should I put money, I've asked you this before, why should I put money into stocks when you've got a war that appears to be escalating over there, a very high level of inflation, and the likelihood of sharply higher interest rates? I mean, I just can't see the case to put a lot of money into stocks and expect your values to go up.
Yes, Stuart, you're absolutely right. What I'm saying is if these factors happen, this market could turn positive very quickly. If these factors don't happen, we are in a road to nowhere. I think the best place to hide is energy stocks. I've talked about it right here. I have a 20% position in the XLE for my clients right now, and that's kind of where you can hide out. And I don't know if you want just cash, but if you have a multi-year time horizon, you want to buy some Microsoft or some Boeing or something.
Mike, I got to tell you that a lot of our viewers are really angry. They've lost 20, 30% of their money. And we've been told, be bullish long term. Don't worry about it. Be bullish long term. They're not exactly happy right now.
Well, Stuart, that's unfortunate that they've done that poorly. The market's only down about 11% from it, or 10% from its absolute all-time high after a plus 25% year last year, 15% the year before, up 30% the year before. So we've had a tremendous bull run, and we're only, like I said, 10 or 11% off our absolute all-time high. So right now, I would be rotating into quality if you have not already. I've been saying that you always want to have a little bit of cash. But the thing is, if you go all the cash right now and some of these other factors happen, we could recover those losses in the blink of an eye. So you need to be perpetually invested. Portfolio construction is key. And so what I'd say is I'm not a super bull, but if certain things happen, we could have days like yesterday where the market's up 3% in the blink of an eye.
All right. Mike, I'm out of time. You were a super bull, but I don't think you are now. Michael Lee, we'll see you again soon. All right. Let's take a look at some of the